Okay, cool.
Okay, so those of you here, most of you know Chris Eggleton from AMP Mortgage. Pleasure working with you. If you have not, give it a try. Get us going on working.
Yes.
A lot of prospects. Go offer. Going to get highlights. So buyers. Right?
Yes, sir. Good morning. How is everybody? Good. Well, it's Friday, right? That's pretty exciting to begin with. Anybody mind if I take my jacket off? Okay. Okay, so we're going to go through a couple of things on this presentation, and then we're going to get some additional information from everybody so that we give everybody the amount of leads that they want, okay? And one of the reasons why we're doing this, bringing everybody in, I want to make sure that everybody understands the VA product, how to sell it, what the benefits are, all that kind of stuff. And then I talked to my vendor this morning, we have a total in Broward County of about 5,500 leads that we have the opportunity to get. And basically the leads, what we're going to get for that is renters that are veterans. They're going to provide to us their phone number, address, number of adults in the family, number of kids in the family, how old they are. They're going to give us an idea of their income. They're also going to be everybody with 680 credit scores or higher. And the income is based on the 2 adults that are in the family. If there are, in fact, 2 adults. There's just one, it's just based on that. The leads are going to cost $2 a piece. And we're going to get into some of the more details. But the first thing I want to do is on the presentation, we're going to go through that. And Alice, if you want to grab one of those real quick. So we're going to go through the guidelines. We're going to go through the DD-214, which is the discharge document, which is the document that you need to obtain from the veteran. I'm also going to show you an example of a COE, which is a certificate of eligibility. That's when we know for sure that they qualify. I'm also going to go through some census information for Broward and Palm Beach counties, and then there's a script that was provided by my vendor on this deal. I'm also going to work up an additional script that I hope to have to you guys by next week. And then we're going to discuss some options on maybe the best ways of implementing this thing. So if you guys want to turn to that first page, and I am going to scroll through this thing here. Don't forget to remind me to scroll on this thing for those of you guys listening at home. So the first piece of the VA fixed rate guidelines and adjustable rate guidelines. And if you look at the top, it says this is just for their primary residence. They can't use this benefit to buy a vacation home or an investment property. They have to live in the unit, okay? It can be a 1 to 4 unit. It says PUD, condo, financing up to 100%. There's some exceptions for that we'll get into. We can go up to a maximum of $2 million. They only have to have a credit score of 620. But if they're going over $1 million, the credit score has to be jacked up to 680. Does everybody see that? The debt ratio, we can go all the way up to a 60% debt ratio. So it's very relaxed guidelines. And they look more at spendable income, which we'll get into in a little bit here. And then it says DU approved or LP accept. What that is an internal computerized automated underwriting system. DU stands for desktop underwriter. LP is loan prospector. So those are just some of the internal stuff that we use on our side of the table. Non-veterans are not eligible except for the spouse of an eligible veteran. Basically, if you've got somebody that is deceased and it's due to then we have to, they might be eligible, basically, if it's a widower of a veteran. So keep those folks in mind. The next little thing down there, it says eligible properties. 1 to 4 unit properties, condos, and PUDs. I looked up this morning on the HUD website. We have in Broward County 263 VA approved condos. So it's not like, you know, where you call me and you go, hey, I've got a guy that's only approved FHA and there's only 5 in the entire county. Okay, so it's impossible to get anybody into an FHA condo for the most part. But on the VA side, as you can see, there's 263 of them. And what I'm going to do is we're going to have a sign-in sheet. I'm going to go and develop one here before everybody leaves, and I want to get everybody's email address, or if everybody has their business card, you can give me your business card, and then I'm going to email out to you guys the list of the VA-approved condos in the county. There are 52 approved condos in Palm Beach County. We're going to test this out in Broward County initially, and depending on how the results go, then we might try this same thing out in Palm Beach, and then we might then go down to Miami-Dade. Okay? And if anybody has any questions as we're going through this, don't hesitate to ask me. Yeah. I think if it's more than 6 months, yes. But here's the things that, from an underwriting perspective, they look at. They look at where are their bank statements going to? What's it say on their driver's license? Where are their taxes being done at? So if everything matches up, then that's no problem if it's, you know, kind of one of those in-betweener deals, if that makes sense. Yeah. Morning. The VA is more relaxed, I believe. Mm-hmm. I'll be honest with you, I haven't dug into it enough to be able to tell you what the differences are, why one condo is approved VA and one is not approved FHA. I don't know the answer to that question. Comes off the HUD website. Okay. All right. At the bottom of this sheet, excuse me, where it says eligible properties, we've got 1 to 4 units, condos, PUDs. Ineligible properties, manufactured homes, co-ops, working farms, ranches, 1 to 4 units up to 2 million. At the bottom of this first page, you're going to see where it says general loan limits. Does everybody see that? And it says 1 unit, $453,100. That's the county limit in Broward County for a normal conventional loan. If it's a 2-unit deal, they'll let us go up to $580,000. If it's a 3-unit deal, they'll let us go to $701. If it's a 4-unit deal, they'll let us go to that $871, $450 number. Does everybody see that? So let me explain to you how this works. So let's say that you've got somebody that's wanting to buy a single-family property, and it's the $453,100. They can finance up to that amount, 100% financing, no down payment, and no mortgage insurance. Okay? But if they go over that amount, which is allowable, for every dollar they go over that amount, they have to put 25 cents into the deal. So in other words, if they buy a house for $553,100, in other words, $100,000 over that, they have to put $25,000 down. Oh, okay, thank you. Appreciate it. Now, you'll also see on there that they can buy up to a 4-unit deal. Did you get a packet when you came in? Okay, so you're good? Okay. So as the number of units increases, so does that loan amount. and they can use the income off of the other units. Let's say that you put somebody in a 4-unit deal. As long as they have prior landlord experience, the underwriter will allow them to count that income into the equation when they get qualified. So the income that they're going to make off the other 3 units. So for example, let's say that on the appraisal, when it comes back, the appraiser says that the other 3, he's got to live in one of them, right? So the appraiser says, all right, in the other 3 units, he's going to be able to rent those out for $1,500 a month. So that's a total of $4,500 in income that he can use. Now, they don't give him quite that full amount. It's 75% of that $4,500 that they'll let him use to count towards qualifying for the loan. So you might have a situation where the guy only makes $1,000 a month on his job, but if he's buying a 3 or a 4-unit deal, he may still qualify because they're going to allow him to use that income that he would generate off the rental piece. Does that make sense to everybody? No, they want him to have prior landlord experience. He had to have rented out property in the past. Typically is what they're looking for. Well, here's typically what I've seen them look at is show me one of their previous tax documents where they have a Schedule E. Is typically what they're looking for. Or if they at one point worked for a rental agency, a leasing manager or something like that. Yeah. By the appraiser, what the appraiser puts on the report. Yeah, what they think the rent roll will be on it. Okay, let's keep moving. Go to the top of the next page. If I can get this thing to scroll here. Talks about residual income. And it says loans $79,000 and less and $80,000 and more. So we're probably going to fall into the $80,000 and more category. And we are in the South region. So you see on there where it says family size, if it's just the veteran by himself, after he pays all his bills, as long as he has $441 left over, he's going to qualify. So very relaxed guidelines on the VA deal. Okay. The VA loan is the only loan where I'm legally approved to talk to the appraiser. Credit score, like I said before, as low as 620. Debt ratio as high as 60. Very relaxed. If it's him and his wife, then they have to have $738 left over. Him and the wife and a child, $889, $1,003, or $1,039 for each additional person. What's it say there? Add in an additional $80. So once again, pretty easy, relaxed guidelines. The VA also, the next bullet point down, the VA allows them to pay points to buy the interest rate down. Funding table. Okay, let me explain this to you. When somebody gets into a VA loan, there is a one-time VA funding fee that has to be paid to the VA, which helps fund the program. And that fee depends on whether or not it's the initial use, it's the first time they've ever bought a house using their VA benefits, or if it's what they call subsequent use. They've bought a house before using their VA benefits. So if it's first time use, that fee is 2.15% of whatever the loan amount is. If it's subsequent use, it's 3.3%. And that amount is financed into the transaction. So if they're buying property for $100,000, the loan amount will actually be $102,150 because it's financed in. They allow them, they don't have to like stroke a check for it. And what that allows them to do, or where that money is going to, it doesn't go to the bank, it doesn't go to the loan officer, it goes to the VA. And basically, the VA benefit, why a lot of institutions offer it, is because the VA guarantees that loan the first 25%, basically. So if they're buying a $100,000 house and it goes into foreclosure, the bank that owns that deal, they're really only responsible for 75% of it. So the VA is going to give them, let's say it's a $100,000 deal, and they charge off, they foreclose, they charge the deal off, and what they get at the sheriff's sale is $80,000. Bank didn't lose a dime because the VA is going to pay the difference. But if it goes to sheriff's sale and they only get $70,000, the VA will pay them $25,000. They're going to be short $5,000. Does that make sense to everybody? Okay. All right. Now, the other thing I want to tell you is if you're dealing with somebody that's a disabled veteran, and it's military related and it's 10% or more, all of the veterans, when they get disabled, the VA will tell them what percentage of disability they are. If it's 10% or more, they do not have to pay that VA funding fee. Okay? So kind of remember that. And it'll tell you that on one of the documents that we have to get from them, which is called the DD-214, which I've got a couple of examples in this packet that I want to make sure and show you guys. Yeah, Joe. Yeah. Yes. Correct. Okay. And the next bullet point down, we talked about the use of the rental income on the 2 and the 3 unit deals, right? The VA will allow the veteran to use income to qualify as long as the veteran has prior landlord experience and has 6 months of reserves of PITI. Does everybody understand what PITI is? Principal, interest, taxes, and insurance. So if on the unit he's buying, if all of that added up is $1,000, if he's got $6,000 in a checking account, savings account, retirement account, a Roth or whatever, then they're going to allow him to use that money. Non-traditional credit. Here's a nice little kicker. It says loans for veterans with non-traditional credit are allowed on 1 and 2 unit properties only. So what that means is, let's say that you get a younger guy or girl who's a veteran, and they really don't have any established credit. They don't have bad credit. They don't have collections. They don't have slow payment history. They just have no credit. And I pull their credit report, and it comes back, and it's zeros. I can still get them approved, even with zeros, on this, what they call non-traditional credit. What we have to do is we have to get 3 credit references: a cell phone bill, car insurance payment, maybe electric bill or a water bill. And we call those places. They provide us a rating going back at least 12 months. They give that to us in writing. We submit it into the underwriter, and they'll get approved with no score. So pretty flexible, right? The top of the next page. Okay, this is an actual example of a discharge document. Every time a veteran gets discharged from the military, they receive this document. It's one of the most important ones that they receive, and most of them keep it in a lockbox or a safe or something like that, because this is what kind of guarantees their benefits. If you look down in the lower left corner, all the way at the bottom, you're going to see here where it says form, and then it says DD-214. Does everybody see that in the very low left bottom of this form? That's how you're going to know you have the right document. DD, which stands for discharge document. All right. Then up in the middle of the page, the other thing that we're looking for, and it's in the section that says transfer or discharge data. And it says character of service. It's kind of almost in the middle of the page, and it says honorable. We're looking for honorable discharge. Does everybody see that? I've never seen anybody get approved for a VA loan that had anything other than honorable in that box. Okay, does everybody see that? Here, Alice, let me show you. Right there. Right there it is. Okay. If as I'm counting the lines down on the paper, 1, 2, 3, 4, 5, 6, 7. The seventh line down says character of a service. I think that says, was that say 13 in there? A? In box 13A, honorable discharge. This particular guy was a Marine, it looks like. Everybody see that? So, the United States Marine Corps, he was a corporal. His pay grade was an E4 when he got out. He was from Indiana. He went to El Toro, California. It tells you the decorations that this guy received: National Defense Service Medal. He was a rifleman, sharpshooter badge, and the education that he received while in service. I've seen some of these that have come across where it was like somebody that was like a Navy SEAL kind of guy, and there were so many things in that little paragraph. I didn't want to turn him down. He would have come back and shot me. That's my guess. Anyway, the next page. Let's go to the next page. Okay. The next page is an example of an actual certificate of eligibility, a COE. This is what we receive from the VA that verifies that the information he gave us on that DD-214 was accurate. So just so you kind of understand the process flow, either yourself or the loan officer will get a copy of that DD-214 from the veteran. We receive that in, and we fill out a document, and then we send that to the VA portal. And then they will do a research, and then they'll come back and they'll give us this certificate of eligibility. I've seen it take as little as 2 days. I've seen it take as long as 2 weeks for me to get that COE back. But on this, the things that it will tell you, and at the very top it says certificate of eligibility, right, in the top right. Then it tells you the branch of service. This guy was a Marine. Then see where it says funding fee at the top on the right side. It says non-exempt. That basically means he's paying the fee, right? If it said exempt, that would indicate to me he's got some type of disability and he doesn't have to pay it. Says this veteran's basic, I'm reading in the middle of the page, this veteran basic entitlement is $36,000. Total entitlement charged to previous VA loan is 0. And on the next page, I'm going to show you this particular guy had a previous VA loan that he paid off, but the VA didn't have record of it being paid off. So the original certificate of eligibility said that he didn't qualify for full benefits because they thought that he still owed money on a previous VA loan, but we were able to get that corrected. In the next paragraph down, it says the veteran is eligible for benefits. All right. Let me scroll down here so the people looking at this from home can see this. So right here it says the veteran is eligible for benefits. Then the next thing down where it says conditions, everybody see that? It says subsequent use funding fee. The veteran must pay a subsequent use funding fee on any future loans unless the veteran is exempt. Funding fee. Veteran is not exempt from the funding fee. Okay. So go to the next page. This is the same guy, and this was the original one that we sent in. And what it was doing, it was picking up a previous loan that the guy had from 1977. His loan was for $49,300. Says the date of the loan was March 1st, 1977. Tells you the entitlement charged on that deal at that time. And below that, it tells you the entitlement that was remaining, the $18,500. So basically what that means is, like I indicated before, the VA covers 25% of the loan. So right now, the county limits the $453,100. If you did 25% of that, it's going to be a little bit more than that $36,000 but that kind of gives you a rule of thumb of where that number comes from. And it tells you that this was subsequent use funding fee. The veteran must pay the subsequent fee. So how much is the subsequent fee? Can anybody tell me from the first page that we looked at? What was that percentage? On the where it says funding fees. There you go. All right, here you go. You get the first kiss. All right, Alice, you get one too. Okay. All right. So we're clear on that. How much is the initial funding fee if it's first time use? Anybody know that answer? 2.15. All right, good job. Okay, now the next page in. This is a letter that a veteran gave us. This particular gentleman was disabled due to military-related service. So how much of a funding fee would he pay? Oh, man, that's a good answer. There's a kiss for you. Okay. Let's say he's 5%. What's his funding fee? That's right. He's not exempt. There, you get a kiss too. Come on. All right. So he's got to be at least 10% disabled, and then there's no fee at all. If he's less than that, paying the fee. And if it's the initial, it's 2.15. If it's subsequent, it's 3.3. Right? Okay. So if you read this letter, it says this letter is a summary of benefits you currently receive from the Department of Veterans Affairs. We are providing this letter to a disabled vet to use in applying for benefits such as housing entitlements, free or reduced state park annual membership, state or local property, vehicle tax relief, civil service preferences, any other program or entitlement, blah, 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 blah. And then if you go down through here, under the heading where it says military information, okay, it tells you your character of discharge and service date include Army honorable. And it says he was in July 17th, 1967 through May 31st, 1969. That was the old Vietnam era, right? Okay. You don't have to get into this kind of knowledge of it because we'll handle it for you, but just so that you know, if you were in the military and it was not during any type of a combat kind of a deal, and let's say that you were discharged, it wasn't honorable, but it wasn't dishonorable either. Let's say that you got in and you had a pre-existing medical condition they didn't know about initially, and then you got kicked to the curb 90 days later. Those people typically don't get disability, or they don't get VA benefits, just so you guys know, which that comes up every once in a while. And some of them require certain lengths of time in the military. However, if you were in one of these, military, like the Vietnam or the Gulf War or any of that kind of stuff, I think as long as you were in for 90 days, you automatically qualify. Okay. All right, so in this particular client where it says VA benefits information, service-connected disability, it says yes. Your combined service-connected evaluation is 70%. So he would qualify for being exempt, right, guys? All right. So these are the types of documents that we're looking for. Now, go to the next page, and it's going to talk to us about, I went and got some information regarding the stats in Broward and also in Palm Beach County. So now this information is as of 2016. So these numbers are off a little bit. That's actually higher is what I've been told. It's closer to 85,000 veterans in Broward County now. But I wanted to kind of go through this information with you so that you know that there's more veterans out there in this county than what I. So we've got a total of 81,665 as of 2016. If you scroll to the next page, it kind of gives you a breakdown of those 81,000. So 81,665, Gulf War veterans, 9,639, which is the second line down all the way to the right. Gulf War veterans from August 1990 to August 2001, 13,000. Vietnam era, 25,000. Korean, 9,700. World War II, 7,300. All right, tells you how many male, how many female, what the ages of them are. And if you drop down a little bit, it tells you median income. So median income is about $37,000 a year. Now, on the lead that we are going to be providing, it will give you a range of income. The guy told me it'll say 100,000 and less, 100 to 150, 150 to 200, and so on. So you'll have an idea of how much money that the two adults in that family make. Okay. The next page that's in there is basically giving you information on the number of disabled vets. Those are the folks that don't have to pay the funding fee. So out of the 81,000, almost 14,000 of them are disabled of some form or fashion. So there's 13,687 that are disabled. 10% to 20%, there's 4,200. 30 to 40, there's 2,200. 50 to 60%, 1,500. 70% or higher, 3,800. So you can tell that there's going to be some people that you run into that are going to be disabled. So one of the things that I always tell people when they're talking to a veteran, whether it's on the phone, like it's going to be with these folks, or if it's in person, the first thing you want to do is thank them for their service, right? Okay. So Palm Beach County, here's the numbers for Palm Beach. Almost 88,000 people in Palm Beach, right? Go to the next page. So here's the number, 87,989, Palm Beach. On the next page, here's the information of the breakdown of that. So we've got 18 to 34-year-olds, 3,722. 35 to 54-year-old people, 13,175. 55 to 64, 11,282. 65 to 74, almost 20,000. 75 years and older, almost 40,000. Tons of them, right? And the number, go to the next page, tells you the number of disabled vets that are in Palm Beach County. So there's almost 13,000 disabled vets in Palm Beach County. So between the two counties, we've got 160,000 veterans, roughly. Now, we're scrubbing through these folks so that we can target the audience down a little bit. Instead of using a shotgun and spraying to everybody, we're using a rifle and we're going to pinpoint on a particular group. This particular group is going to be renters. Now, the VA doesn't necessarily, they could have owned a house in the past, and now they went into renting, and away they go. You know, a lot of people struggled in 08, 9, 10, 11, 12 with foreclosure, bankruptcy, all that kind of stuff. The VA is very relaxed on that as well. 2 years out on bankruptcy, 2 years out on foreclosure. So some of these people might be renting because they went into foreclosure and they think they have to wait 7 or 10 years before they can buy. That's why I want to educate you guys with the guidelines so that when you're talking to them, you can build down those fears, knock them down. Yeah, Joe. Well, it depends. If they were in one of these wars, then it's 90 days. If it's a non-war deal, I think it's a minimum of 2 years. No, it has no relevance at all. They don't care. Don't care at all. Okay, let's go to the next page, which is the script that the gentleman sent me. We're going to go through this, and then I'm going to make up one of my own and send out to you. And this is a test, and you know these are relatively inexpensive. There's no guarantee that this is going to work, but what I would tell you is, when we call these folks, our company does a little bit different take on it when we make phone calls. And we, in my mind, a loan officer, 99% of our sales are done over the phone. An agent, most of your sales, 90% of them are probably face-to-face. And probably the majority of you probably aren't comfortable making phone calls because you're just not used to doing it. Phone calls with having a sales effort behind it. One of the things that I'm going to do is I'm going to set aside a couple of mornings and maybe 1 or 2 afternoons over the next 30 days so that if you guys want to come in to the office, I can help you make the calls. We can make them together. So hopefully our success rate will be a little bit higher if I'm involved personally. Because here's one of the things that I've known. I've been buying leads from companies for years. In the mortgage business our model was we would buy internet leads, hand them out to the loan officers, and make sales calls. And we would buy leads from primarily the same companies over and over again. We'd hand them out to loan officers in the same building that had access to the same loan products, same everything, but one guy would convert 2% of them while another guy would convert 20%. Okay? The guy that was converting 2%, his thing was, oh, these leads are terrible. Okay? And the other guy would go, when can I get more leads? Okay? A lot of that has to do with the comfort with what you have on the phone and also the confidence of knowing a little bit about it. That's why I want to make sure that you guys, I don't expect you to know 100% of everything, but if you know the basics, then you're going to come across more intelligent in front of these people. They're going to trust you. They're going to move forward with you, which is what we want, right? So let's go through this, and then I'm going to need to get, because we have a limited supply of leads. The guy told me this morning, and they scrub them through the do not call list. All right, so you don't have to jack with looking them up and seeing whether or not it's okay to call them or not call them. You can call every one of these, and there's a total of about 5,500 that have it, and the ones that we're getting, they have at least a 680 credit score. They're all veterans, and they're all renting. And I would assume that everybody in here knows the advantages of home ownership over renting and can relay that in conversation with somebody. And then on top of that, these veterans don't have to come up with any money down. So most of these guys that are renting, and maybe it's not going to be a sale today, but maybe it'll be a sale 6 months from now or 9 months from now when they're able to get out of their lease. So you're basically being a farmer. You're planting the seed, because the reality of it is a lot of these people, maybe they just signed a lease and now it's going to be a year. But what I want you guys to get into the habit of is when you're talking to these folks and there's the possibility that they can buy, have them get in touch with me or one of my guys so that we can take an application. We can look at their credit report. And if there are some issues on there, that gives us plenty of time to get it cleaned up and spit shined. They don't have to come up with any money for the down payment, but they have to come up with money for the closing costs. So they're going to have a little bit of skin in the game. However, we can help them with that. And on the VA loan, they allow the seller to contribute 4% towards closing costs and prepaids. Does everybody understand the difference between closing cost and prepaid items? Okay. Prepaids are the amount of money that is set aside in escrow for the taxes, the property taxes that you got to pay the county every year, and homeowners insurance that you're paying to like State Farm or Farm Bureau. Because the VA does require that these people escrow. They don't have the option not to. They must escrow. They did a survey, and you're 25% more likely to go into foreclosure if you don't escrow, when they went back and looked at the stats. Okay, so on this, it says, hello, Mr. and Mrs. Blah, blah, blah. My name is Chris, and I'm with the K Company Realty Group. Now, I know you're busy, so I want to be brief. I'm calling regarding the government VA loan program, as we noticed you are well qualified, but it appears you're not taking advantage of it, okay? And it says in here, assume the sale. What is the VA program? So at this point in the conversation, we want to kind of explain the benefits of what the VA program is, because some of them may know, some of them may not know. I'm willing to bet that the majority of these folks that are renting, I've got a son that's a Marine. He didn't know anything about his VA benefits till I told him after he got back from, after he'd been in it like a year. And I helped him buy a house, and at the time of he paid for some of the stuff out of his pocket, and then at the time of the closing, he actually got money back. So, and he went from spending $1,500 a month in rent to his house payment being about $1,000 a month. And then when he went to Afghanistan for a year, he ended up renting it out, and I think he rented it out for $1,500, and the house payment was, so he was making $500 a month on the thing. Okay. So then it goes in and it kind of explains to these guys a little bit about the VA loan. Congress created the VA Loan Guarantee Program in 1944 to help returning service members achieve the dream of home ownership. Since then, the Department of Veterans Affairs has helped more than 18 million military members purchase homes. What is a VA loan? A VA loan is perhaps the most powerful and flexible lending option on the market today. Rather than issue loans, the VA instead pledged to repay about a quarter of every loan it guaranteed in the unlikely event the borrower defaulted. That guarantee gives the VA approved lenders greater protection when lending to military borrowers, and often leads to higher competitive rates and terms for qualified veterans. What are the key benefits of a VA loan? Far and away, the most significant benefit of a VA loan is the borrower's ability to purchase with no money down. Apart from the USDA loan, the rural housing deal, it's all but impossible to find a lending option today that provides borrowers with 100% financing. We don't have any rural areas in Broward County, okay? So there is no other 100% financing type of loan product. VA loans also come with less stringent underwriting standards and requirements than the conventional loan. In fact, about 80% of the VA borrowers could not have qualified for a conventional loan. These loans also come with no private mortgage insurance, a monthly expense that conventional borrowers are required to pay unless they put down at least 20% of the loan amount. All right. So these are facts that you can throw into the conversation when you're talking to these people. I'm not saying that you need to read this script verbatim, but you need to know kind of the bullet points and throw that into the conversation. About the VA home loan guarantee. Let me scroll this page for the people at home. Okay. Most VA home loans are handled entirely by private lenders such as us, and VA rarely gets involved in the loan approval process. VA stands behind the loan by guaranteeing a portion of it. If something goes wrong and you can't make the payment anymore, the lending institution can come to us to cover any losses they may incur. The VA loan guarantee is the insurance that we provide the lender. Okay? And then it goes into the VA home advantages. The guaranteed VA provides to lenders allows them to provide you with more favorable terms, including no down payment as long as the sale price doesn't exceed the appraised value. So if it happens to appraise short, which, by the way, I have not had a VA appraise short in probably over 10 years. The last time I had a VA appraisal come in short, I think it was probably back in 08 or 09, right when the crisis hit. No private mortgage insurance premium is required. VA has rules limiting the amount you can be charged on closing costs. Closing costs may be paid by the seller. Put in there 4%, guys. And remember that we're not going to charge the appraisal fee. So they won't have any out-of-pocket expense initially. The only thing they're going to have to come up with is the money at the actual closing. Yeah. The seller can contribute up to 4% of the purchase price to pay closing costs and prepaids. And my rule of thumb when I'm talking to people, and this is normally a little bit of on the high side, and there's cushion into it, is I always tell people to count on about 2% for closing costs and 2% for setting up the escrow account, is my kind of rule of thumb. So they're going to need, let's call it 4%. But they can get a gift for all of that, the seller concessions, and then I'm also going to show you how we can provide what we call a lender credit to help them with that, to offset it. And I'll show you guys how that works here in a second. The lender can't charge you a prepayment penalty. The VA may also provide some assistance if you run into some type of difficulty. The other things that you should know, you don't have to be a first-time home buyer, and you can reuse the benefit. VA-backed loans are assumable as long as the person assuming qualifies. If you have, let's say that you're going out on a listing, and the guy that wants you to sell his house is a veteran, and he has a VA loan, another veteran can assume his mortgage. He doesn't have to go through the loan process and pay all the fees and all that stuff. He can just take over that loan. There's normally an assumption fee of like $500, but he has to qualify. Okay. Yeah, only another veteran. A spouse of a deceased veteran can. They have to qualify. No. Now, an FHA loan, getting off topic for a second, all FHA loans are assumable. So the rates FHA loans have been pretty low over the last several years. So if you get listings on those, FHA loans are assumable to anybody. Okay. All right. Now yeah. It's the same underwriting process. Yeah. The other thing is, I was at the board yesterday teaching a class, and I saw this flyer that I threw into your pamphlet. So it says, serving those that serve our country. They're doing it looks like some type of designation class to become a military specialist. So you can become a military relocation professional and get that insignia. And then there's another one that's next week, March the 13th in Boca, from 1 to 4, costs $35 a person for the military mortgage boot camp. So one of the things that I want to go over with you guys real quick is we don't have a blackboard in here, do we? Okay. So I want to explain to you how the lender credit works. So let's say that you get somebody on the phone and they say, yeah, I'd like to be able to buy, but I've only got $3,000. So let's say that you're going to need $6,000. So we're $3,000 short of being able to make this deal happen. What we can do is provide what we call a lender credit. So I had my assistant this morning look up what the rates were for a VA 30-year fixed. And as of this morning, that rate was at 4.75% on a 30-year fixed. And that's what we call the par rate. Okay. They have the option to buy it down by paying a point. So instead of them getting 4.75, if they wanted to come to the table with 1% in the form of a point, the rate would reduce down from 4.75 to 4.5. If they wanted to pay 2 points, instead of it being at 4.75, it would go to 4.25. It's 1% of whatever the loan amount is. Okay. Here's what I say every single time. How long do you plan on living in the house? And then I can do a mathematical calculation that tells them exactly how long it'll take them to recoup that money. Most of the time, if they're going to be in the house more than 5 years, it's smarter for them to pay the point because they'll get it back, the cost, in lower payments after. Most of the ones that I've looked at, it's between the 48th and 54th month that they recoup the money. So, that's somewhere around 4 years, 4.5 years, something like that. Now, the other option that we have is providing what we call a lender credit. So I told you that the par interest rate right now is at 4.75. So I can go above that, and then we can kick them money back. So this morning, the number was, if we took them to, like, let's call it 5.5% on the interest, I can kick them back 1.75% of whatever the loan amount is. So I left my phone with my calculator in the office. Somebody do a calculation for me. Let's say the average loan's $250,000. What's 1.75% of 250? Okay, so we can kick in $4,300 towards the closing costs. So we can bridge that gap. So what do we got going on right now this time of year with everybody? And this is the perfect time to be doing leads. We got their tax refund check coming back, right? Okay. So the average tax refund check that I looked up on the internet 2 weeks ago was $3,800. If they're currently renting, what are they going to get back? They don't get like their security deposit back? Do they get anything else back, or is that it? That's about it. So the security deposit's normally 1 month's rent. The average rent here in Broward County is what, $1,500 to $2,000 maybe? All right, so with their $3,800 tax refund check and then getting $1,500 more back from their security deposit, now we're at 38 and 15, 48, we're at $5,300. Plus I can kick in money. Plus the seller can kick in money. We should be able to get these people into a deal with what I'll call finagling. Okay? Does that make sense to everybody? I mean, and here's the other thing. I've heard some people say, the guy listing the house, the agent on the other side, who's maybe been an agent for forever, 30 or 40 years, they go, oh, I don't want to sell it to a veteran. I had a hard time with a VA loan 30 years ago. Okay. And 30 years ago, I've been told that doing a VA loan was a pain in the butt, and it was difficult and a little time consuming. But now it's been streamlined. They've really relaxed the guidelines. Everybody's got a soft spot in their heart for veterans, including the appraisers. So you're never going to have an issue of, oh my God, I hope that the appraisal comes in high enough. Okay. I just haven't seen it. As soon as the appraisers find out it's for a veteran, the old soft spot kicks in and we don't have any issues. Go ahead. Mm-hmm. He doesn't pay taxes. Yeah. Yeah, there's all sorts of discounts that disabled vets qualify for. Like it mentioned in there, they don't have to pay to get into any national park. They don't, a lot of them pay no excise tax on their license plates. They get preferred parking. A lot of places, I got a buddy that's got a Purple Heart, and on his license plate it says he has a Purple Heart, and he does not pay for parking anywhere he goes. So there's all sorts, and they don't pay taxes on the property. There's all sorts of benefits that the government puts in for these guys. But a lot of them don't know about all of the benefits. So one of the reasons for this class is to kind of educate you guys so that when you're talking to these folks, some of these guys might know that they qualify for a home loan. And the reason they're renting is because they lack the knowledge. So if you can educate them, this is going to be kind of an educational call, and that's maybe one of the ways you could present it. The other thing that I'm not opposed to, and I'll wait and hear some feedback from the group, is if anybody wants to do some type of a, kind of, even though they don't have to necessarily be, but a first-time home buyer class for these guys. If that's the hook that you want to use when you're having the conversation. Hey, I'm so-and-so from the K company. I understand that you're a veteran. We're going to be doing a first-time home buyer class. Wanted to invite you into the class because the ease with which you'd be able to qualify. And no down payment, no mortgage insurance, and all the rest of the stuff. And then you can also hit them over the head with the advantages of buying versus renting, the tax breaks, all that kind of stuff. And then just set up the class, 30 days out or whatever. And then we can throw something together, bring in a group and kind of hit them over the head with that stuff. We can go through examples of what the numbers look like. We can tell people the projected amount of money that they would need based on the amount. Has everybody downloaded my mortgage calculator on their phone yet? Let me go grab my phone real quick. Hang on just a second, guys. So on my phone, I have an icon that says AMP, A-M-P, and I can share that with you guys. On there is a mortgage calculator. And there's one in there for FHA loans, conventional, jumbo, and VA. So you click on that, and I can just slide that thing across, let's say to 200,000. It ended up being at 220. Down payment amount is 0. Term is 3 years. I'm going to put a rate in there at 4.75. Taxes, I'm going to put about 1.5. Insurance at 1%. And I'm going to hit calculate. And it comes back and it says principal and interest payments $1,175, taxes $275, homeowners insurance at $183, all-in payment at $1,633. So what do you guys think the average rent is for your clients? Somebody throw out a number. $1,800. So for $1,800, let's see, to get an all-in payment, taxes, insurance, and all that stuff, let's see what that equivalent loan amount is for $1,800. So let me jack this up a little bit. Let me go back. And instead of it being a loan for, let's see, let's change it to $250 on the loan amount. Well, $245, this thing's a little sensitive. All right, hit calculate, everything else stays the same. So on $250,000, I'm sorry, on $245,000, the all-in payment is $1,819. Well, yeah, if they're disabled, they could qualify for even more. Okay? So this calculator could be something that you could use very easily when you're talking to folks. How much is your current rent? Okay, you're paying, are you comfortable paying that? Would you like a higher payment? Are you comfortable with a higher payment, or you want to go a little bit lower? And then you can go into this thing and it'll figure exactly what that loan amount will be. And then that'll make it easy for you. Yeah. I gotta send it to you. Okay. So we're going to have a login sheet, and I'll get everybody's email and their cell number, and then I'll forward this to everybody. Mm-hmm. Okay. Yep. Mm-hmm. Mm-hmm. I haven't had any problems with the VA appraisal. I mean, if it's close, they're going to give it to them, is what I tell you. No, there's 263 approved VA condos in Broward County. Uh-huh. I can't do anything about that. I would say to you on that, if it's a VA approved condo, they know it's 100% financing. So I would assume that they're not going to have an issue with any of that. I would assume that if the VA went and got that condo association approved, you know, they had to, at the time that they were approved, whether it was 2 years ago, 10 years ago, or 20 years ago, you know, the powers that be knew what they were getting into with the VA type of client. So I would assume that you're not going to have any of that issue. Can't guarantee it, but unless the rules, let's say that the condo management overturned the management folks, turnover or whatever, and then a new regime came in and they wanted to change some of the rules or guidelines. That's a possibility, but it doesn't seem likely because if they're an approved VA condo, they've got veterans probably already living there. And the veterans that already live there aren't going to make it more restrictive not to let vets in, is my guess. No. I have not memorized that list. But I'm sure one day I'll be bored sitting at home. And when I do, I'm going to call you, Joe. Oh, they still have to put a deposit down, but then that money is going to go towards their closing costs. Yeah, I mean, that's something that you have to negotiate. And you have to, hopefully the agent on the other end knows about the VA loans. If he doesn't, you need to have a conversation with the agent on the other end and educate them on the fact that, you know, this is 100% financing. The only thing that the guy actually has to bring to the table is the closing costs and setting up the escrow account. So that amount we're estimating to be $4,000 or $5,000, whatever that number is. So we're willing to put that amount down as our earnest money. Yes. Yeah, and we are actually, I don't have it segmented, but our normal turnaround time right now, it's dropped. I think when we first started with you guys, we were at 28 days. Now we're down to 24 days, and it's dropping again next month. And the reason it's dropping is the owner of our company instituted a rule with the processors that if they get a deal clear to close in 12 days or less, they double their bonus. So there's a huge incentive on the processing team side to get these deals in and out and clear to close. So you shouldn't have too many issues. Okay. Yeah. You're welcome. Thanks, Karen. Yes. Yep. We count a clear to close when it comes out of underwriting and they say it's approved. And then they got to send that document out, wait 3 days. Yes, when it goes out, not when it's, you know, so let's say that it goes out on a Monday. We count Monday as the day that we got the clear to close. Now, we still got to wait our 3 days to actually have the closing, but we got the deal done within, we counted as 12 days. If in fact that was the day. Uh-huh. Right. And that's a possibility because There have been times we've sent out CDs because we knew what the numbers were going to be. So we sent it out early before we actually had the clear to close from the underwriter. We were waiting on one condition or something like that we didn't think we were going to have an issue with, and that condition wasn't going to affect any of the numbers. So we've actually anticipated what all of the numbers were going to be and thought, okay, well, we're going to get this cleared in 2 days. So to get ahead of the game, we're going to send out a CD now, even though there might be 1 or 2 conditions left. Is that considered a loan approval? It's a conditional loan approval, because if they don't get those 1 or 2 conditions cleared, it's not final. I could send out a CD the day you give me the application, but the numbers have to match. Okay? So once we kind of know what those numbers are going to be, then I've seen that we've sent out CDs before. I don't think so. All right, guys, does anybody have any questions about anything that we covered with regards to the guidelines, the DD-214, the certificate of eligibility, any of the census information, or the script? And the script was more of a thing that you would have more information so that when you're on the phone, you're going to be a little bit more comfortable. One of the other things I also wanted to mention to everybody was that if you want to go to the added expense of sending out a postcard to these people, my lead provider is telling me that helps increase your percentage of penetration on closings. Okay? So I think a postcard, well, how much is a postcard? The actual letter and then to mail it out is probably less than 50 cents. So that's something for you guys to maybe take into consideration. Now, the next thing I need to do is get an idea, because we're going to be buying these leads on Monday. And I need to get an idea about how many everybody wants, how many of you guys want to buy, so that when we go to buy them, we don't buy too few or too many. And you're not... well, I think we're just going to do it all at one time. Just give them. So if you wanted 200 leads, that's going to cost you $400. Okay. So we'll give you all 200 of those leads, and then you can have at it. Either calling them, mailing them, doing both, that type of a thing. So does everybody kind of got an idea how much money they want to spend? Yay, nay, no? Here's what I'm going to do. Yeah, I mean, and it's I know, I understand. Well, here's the deal. We're going to be buying these leads on Monday. If you know kind of an idea about how much money you want to spend today, let me know today. If you want to think about it over the weekend and then shoot me an email on Monday before noon, because I want to get these things in by Monday afternoon so I can get them in your hands by Monday evening. But I don't want to buy 5,500 of them and then you guys really, as a group, you guys only want, 50. You know what I mean? So here's what I want to do. Let's do it this way. Who in here knows for sure how many they want right now? Okay. You two guys tell me, give me your name. And how many you want, Fred? Okay. Let me have that, and then I'm going to email you guys. I'm also going to send you my mortgage. I'm going to send everybody in here the list of the VA approved condos in the county, and I'm going to send you my it's basically my electronic business card, and in that there is this mortgage calculator. Yeah, and then that way you can easily project to people what the payment would be on X amount of dollars. Okay, give me yours. Okay. All right. Now, can I get everybody's business card? And then I'm going to email you guys the list of the approved condos. And then I'm also going to send to you guys this electronic business card of mine so that you can easily calculate payments and stuff. Yeah, think about it over the weekend. Let me know Monday morning. Okay? Okay. Yeah. I mean, okay. Test it out. And if you like it, then we can get more. Oh, yeah, yeah. Mm-hmm. All right, thanks, guys.